Welcome back to the LVM Trade Weekly News as of the 24th of May. My name's Mark as usual, and without further ado, let's jump straight into it with one of the best currency pairs, which is indeed the USD and the CHF. The US dollar has gone back and forth in a relatively tight range against the Swiss franc, and I think that will continue to be the case. After all, by the end of the week, we did end up in the middle of this range. The 0.98 level above has been significant resistance, and I think it will be continuing to do so later on. To the downside, the 0.96 level will offer support, and I think that we are just going to bounce around between those two areas again. With all that in mind, look to trade with the outer edges of the trading range, and you should do okay for the next week coming. Well, let's head on over and see what's been happening with GBP against the JPY. As if we can understand or gain a better understanding of what's been happening in the last week, that can indeed give us an idea of what may be coming in the following week's trading. The British pound has rallied for most of the week, reaching towards the Japanese yen at 132 level, where we start to see some resistance. For myself, I'll be fading rallies, but if we were to break above the highs of the week, then I'll sit on the sidelines and I'll wait until we reach the Japanese yen at 135 level, which is a very big increase. And there on that side of the fence, I would more be a seller. I think this market has a lot of weight around its neck, and rightfully so, due to the fact that it's so extremely sensitive due to the risk appetite. That being said, we are sitting just above an area that has massive support, so expect some noise and some fight. Well, next up, of course, is one of the fan favorites for currency pair trading with their assets, and it is, of course, the GBP and the USD. The British pound initially rallied during the week, but found enough resistance around the 1.23 level against the greenback to pull back and form an inverted hammer. If this market breaks the bottom of the inverted hammer, it could open a lot of selling, perhaps down to the 1.20 level, and then the 1.1750 level. If we do rally from here, I am looking to fade rallies every time it shows a bit of hesitation, as the British pound has a lot to think about where the UK economy and Brexit comes into play. And of course the coronavirus numbers in the UK, which are worse than many other places in the world. And finally, on this week's roundup, we're going to have a look at one of the biggest fan favorites for many reasons as well, although it is last on our list this week because there has been minimal movement within these two currency pairs, and it is indeed the Euro and the USD. The Euro rallied during the week, reaching all the way up to 1.10 level, before pulling back pretty significantly. We're currently in the middle of a range, hanging around the 1.09 level, which is essentially fair value. I think we will continue to bounce around at the 1.10 level on top and 1.08 level on bottom for the bulk of the coming week, as there's no real catalyst to getting this thing going. And that's all from us this week. Thank you very much for tuning into the LVM Trades news channel for the weekly update. Please do come back again and tune in with our next channel to see what's been happening in the market for different currency pairs. My name's Mark, and once again, it's been a complete pleasure.